Is money starting to flow in and the deals are starting to change up everything in the market? We'll talk about that today. Let's get started. I want to thank our sponsor today, and that is Uphold. We've all been there. Expenses pop up right when the market's starting to heat up. It's not the right time to sell. The last thing you want to do is sell your Bitcoin, your Ethereum, your XRP, or even your stablecoin, USDC. This is exactly why Uphold launched the EXA credit card. When I found out about this, I was blown away. It's an instant line of credit that lets you borrow against your crypto without having to sell. All you have to do is just use your assets as collateral and spend it worldwide using a virtual Visa card. This is the coolest feature I love about this. There are no credit checks, and you can repay on a schedule that works specifically for you. It's the smartest way to stay long in the market while accessing your portfolio's value today. Download the Uphold app and get your virtual EXA card in just a few taps. Let's go over to this first tweet right here, and this will kind of explain some of the deals that are starting to happen. The 4-point Trump-Iran peace deal. This is coming in from J.D. Vance. The deal would be essentially blocking Iran from obtaining a nuclear weapon, reopen the strait, lift the U.S. naval blockade, and then unlock major investments across the region. So this is agreed upon in an MOU. It's called a Memorandum of Understanding. Typically in business, this is almost as good as an agreement. Usually it means that you can't really kind of renegotiate anything. It's kind of outlining certain elements within the deal. I have never done an MOU that an agreement did not come out of. Now, that doesn't mean that that won't happen here, because we're still talking about Iran and the U.S. So let me know what you guys think. Is this a real potential going into a peace deal? Ships of the world, start your engines, let the oil flow is to be one of the funniest things. I would agree that he is on top of it, maybe. But again, we have been rug pulled a little bit on many times when we've done a deal. The one caveat here is that now we're getting at least some verification from Iran that a deal may be in order. And if we do get this MOU enacted, getting this done on a long-term basis could be good for the markets. And of course, remember, this deal right now has about a 60-day run rate to get done. When you look at U.S. oil prices, they're already pricing it in right now at 81 a barrel. This, of course, is after the announcement, and an immediate drop into the $80 a barrel range. And of course, this will start to affect energy prices, which will affect what we'll see in terms of inflation. But we have to see it at the pump, guys. That's where you'll see Americans saying, yes, we agree. It's starting to ease up on the pump price. And that is a key thing for what's going to happen around midterms. If they don't get these prices for gas down, that creates a big problem. I think Trump knows that going forward for sure. If you look at some of the key things here, as I said, the 60-day negotiation period for a lot of these technical discussions around the nuclear program, which I imagine is going to be the big sticking point. That, of course, will be the thing to watch. Whether or not we actually get that into the 60-day program, I'm still a bit skeptical on that, of it actually becoming, but getting Iran to the table is a feat in itself. So kudos to what they've been able to do so far. I want to go to a clip because this is where Vance talks a little bit about this. Take a look.
This is 60 days that they will have to kind of discuss and debate the issues surrounding the nuclear question. But for now, they are saying that they will reopen the strait. The United States is saying it will take down its blockade at the same time, that there will be free passage, that no one will have to pay anything to go back and forth through this. The Iranians, I think, have suggested that this is just for the next 60 days. Do you get the sense that this is a more permanent situation where the strait will be reopened even beyond that 60-day period?
Well, our expectation is that the strait is going to be opened in a toll-free way for the long term, and that's the sort of thing that we're going to figure out in these technical negotiations. You know, there are a lot of very important details to figure out that we're actually going to sit at the table and discuss together and figure out a path forward on these details.
That is, I mean, the way that Vance explained that, I think that's a little bit more promising, because if they're willing to negotiate in person or get in these negotiations in some format to where they're willing to maybe give on both sides, that could end up being very good for the market. Now, remember that the number one thing that this market has had hanging over it has been the oil supply shock that could potentially be at play. And we have pretty much kind of run out of that supply narrative. And I think Mohamed El-Erian talks about this perfectly. Take a look.
And with SpaceX sticking the landing on Friday, are those enough of clearing events to go back to pre-war playbooks?
Had we persisted with this, we would have got demand destruction. And when you get demand destruction, credit risk goes up. So I think we might have avoided a bullet here by not going to the next stage of demand destruction in the US. You know, in some developing countries, unfortunately, that has happened already, and you're seeing demand destruction. We haven't. Our economy remains incredibly resilient. So keep an eye on it.
Warsh's first meeting this week, what we might get out of the dots, and whether or not this MOU, Mohamed, kind of quiets whatever hawkish concerns there might have been if it hadn't come along.
I think it does. I think the tone will be less hawkish than it would be otherwise. But Carl, to be a fly on the wall, a chair's first meeting, the previous chair sitting there, a highly divided committee going in, it must be a fascinating 2 days in the room.
I would say Mohamed is right. It's going to be a fascinating 2 days in the room. In terms of FOMC, we'll be going live on that right this week. What I would recommend for you guys is make sure and subscribe to the channel right now. Hit the bell. That's going to give you a notification. And what I have noticed is that there's been some complaint out there, even when you're subscribed, sometimes our second video, you don't get notified of it. So make sure and get that in there because it'll give you the notification of us going live. That's usually a very good video to watch in understanding the forward-looking statements coming in from the Fed chair. Granted, it could probably be a little bit different with Warsh than what we've seen with Chair Powell in the past, but the one thing that is certain, at least right now, and that is Fed rate hikes are starting to fall from what was a 61% probability and have plummeted now down to a 34% chance. So cut in half almost in a very short period of time. That's the 1 month chart outlook right there on Polymarket. And remember, this all plays into inflation and possibly air cover for Kevin Warsh in terms of being able to hold the rate and or even look at a rate cut if in fact we start to see things correct quickly. Because remember, CPI print were very, very strong last week. PPI, same situation. We have not seen those kind of inflation numbers. This is a very critical time, not only for the Fed, but also for the US. And of course, at that time, you look at the rest of the market and SpaceX is absolutely, as they said earlier, sticking the landing right here. Now, how can it hold is the question mark because it extends its gain another 10%. Second day of trading here on Monday. Now worth 2.3 trillion and up to 177. So let me know what you guys are doing. Are you trading SpaceX right now, or are you looking at other assets that surround this? Because if you look at the crypto market, and we'll show that in a second, almost everything is up significantly, most likely because of the deal that possibly is underway right now. The real question is whether or not this holds. And if you guys think so, put yes in the comments down below. If you don't think it's going to hold this particular pump, just put no. That'll give us some indication of where you guys think this goes. But looking at this right here, crypto was a little bit rugged because of what happened right here on tokenized SpaceX orders. $1 billion went unfilled in the biggest IPO in history. So that included Xstocks, Kraken, Binance, Bybit, etc. Question here I would ask you guys is, now what would you do? Would you go into something like Robinhood or a traditional exchange now and completely avoid these kind of things around these kinds of volatile IPOs in the future? I don't know. That's an interesting to watch. If you look at Robinhood, the stock price, you can kind of see an indicator right there. I want to go to a clip real quick. This will get into whether or not SpaceX can hold this momentum, and can you really believe that it's too good to be true? Take a look.
Well, I don't know that it reminds me of Enron, Tom, but it reminds me of the Enron time frame. How's that? In that I've always said that Wall Street has a printing press too, just like the Fed. It just takes a while to get going. And one of the things that I think SpaceX is ushering in 2026 is massive equity issuance. And historically, without a doubt, in the 20th and 21st century, anytime You have seen massive IPOs and secondaries relative to the size of the market or the economy. Investors generally have been advised to be a little more cautious or reduce their risk.
You mentioned earlier the dot-com bubble. Are we doing dot-com bubble 2.0 right now?
Oh, this is much bigger.
Well, I agree that it's bigger than the dot-com bubble because a lot of those, and I've talked about this before, most of those companies that were brought public in the dot-com era, they literally had nothing except an idea. There was no revenue. Many of these companies coming public now, including what we'll see in the AI sector, whether it's Anthropic or OpenAI, these are actually revenue generating. Now, are they profit-based? No, but most companies, when they're getting rolling, are not profit-based. There's probably, I would say, maybe in excess of 50% of the companies that are traded on the stocks that are not profitable. And there are reasons for that because they're building equity back into the way they're operating their business. So that's a factor. I still am optimistically skeptical as to whether or not SpaceX can continue to hold this run rate. I think it does settle in and adjust pretty significantly. But listen, there's going to be some people that made some money out there, most of which were early investors that are going to be taking that exit strategy going forward. Let's talk about the Clarity Act because the key here right now has been this July 4th idea of a deadline. And I think everybody's been pointing at July 4th because you know Trump, he wants to be very bombastic on, to do these kinds of big signings and that this would be kind of almost like Liberation Day for crypto. The only problem is that right now Tarrant is reporting that this could be logistically impossible. I tend to disagree only in the sense that the Senate is all it needs to go through. It's possible that we won't get it passed, but if the Senate can get it done by July 4th, and there's about 10 days or so that could still occur in June, then I think Trump would claim victory on this because my understanding is he probably feels that the House is going to rubber stamp this going forward. And if you look at the Clarity odds, they are inching up, but not by much. We're just now back above 50% here as we look at the weekly there on Polymarket. So that's one factor to consider right now around Clarity. Other things, you've got 75% of the EU crypto firms now could lose registration status. This is a bunch of crypto companies. I looked at data on this just earlier this morning. Over 3,000 crypto companies. It's like less than 200 that have been implemented as fully registered and compliant in the EU under these MiCA guidelines, which are now in force. So that's a big deal. I don't know if it's going to be a massive issuance problem across all of these companies that are mostly dealing probably with more active and larger markets, which I would lean toward the Middle East and Asia right now. South America, I would say maybe has a similar track record in the EU with the exception of the UK. But definitely something to watch for sure. Other issues that are happening right now, and that is EU is delisting Tether's USDT from licensed exchanges. That goes in effect July 1st. That's a deadline that is underway. And this is having an impact. Right there is the crypto market cap for Tether in terms of overall. And as you can see, it has been sliding dramatically here in June. So are you holding Tether right now? Will you continue to hold Tether? Or is it something that you want to reconstruct? And I think this is going to put some pressure into Tether to really get things going. One thing to kind of consider, though, is that this is starting to move into ETH-based stablecoins. And if you look at ETH-based stablecoins, you're probably going to see ETH starting to see a movement here. And we are seeing a considerable movement right now, almost 10% on the day right now, covering almost everything with the exception of XLM, which is taking a 24% move. But if you look at most of the key assets right now, Solana up 5% right now, ETH holding at almost 10%, Bitcoin trading at 66K right now, getting ready to go to 67, up about 1.5 points right now, but has been moving over the last few days. And I think a lot of this is really, I think, dependent on what's happening in the Middle East. But I think where we really start to see some movement is when and if Clarity goes through. So be on the lookout for that. Tom Lee is also on his way. He's literally at the level of trying to grab the amount of ETH he's been looking for. So in 11 months, he's grabbed, it's 93% of the way to its 5% target. That's pretty significant in less than a year to be able to get that far into the target that they've been striving for some time. And he is so confident that he's starting to launch his own stretch version of his asset that will work as a preferred. And this, of course, coming in right now to 9.5% preferred shares, which will begin trading under BMNP. So right there, keep an eye on that one. From that, of what BitMine is doing, let's jump over to Stretch, because this, of course, is the big one for Bitcoin under MicroStrategy. And the other thing that could be an interesting catalyst here, because remember, Dividend Day is coming, and this is the first time that it has somewhat been depegged. And that's interesting, because with Stretch and where the market is it a buy right now? Because remember, they're trying to maintain Stretch as close to $100 per share as possible. And remember, this now gives you 2 dividend reward dates in Stretch's cycle. So you can see these are complicated instruments that have been pretty much mastered. You know, Saylor mastered it. He said it just, you know, how they constructed it, it had never been done before, but yet it was still legal. BitMine, on the other hand, you're talking about a probably, 25-year veteran of Wall Street who understands this as well. But they're both betting on one thing, and that is that these respective assets go up. Now, Tom Lee, yes, he's sitting on an asset that's earning in DeFi, so he's got a little bit of looseness there, but you've got Saylor who's sitting on an asset that has been consistently getting more gains each year. So it'll be interesting to see how it plays out. Jack Mallers, who's watching this from the sidelines, goes in and talks about this. Take a look.
And you referenced a question I asked yesterday. I'm trying to figure out what is MNAV and what is dilution. You know, if they sell MSTR instead of Bitcoin, and people are asking me like, well, does that mean that the common is getting screwed? I'm like, well, I don't know. I guess it depends on your definition. So I'll stop there. And I was like, hey, listen, I don't know. Like, if we don't have a universal definition of MNAV and we don't have a universal definition of dilution, like if selling equity for cash is not dilution, then I can't have a conversation. Any company that I am running or founder of and stuff, like, haven't done the preferred stuff because I haven't fully personally understood these parts.
All right, so you can see there's some skepticism out there, and this has been one of the things that I think all of Wall Street has mentioned. Either it's brilliant or it's diabolical. We don't really fully see this because you won't see this play out until really the experiment ends, I guess, and that, of course, is whether or not Bitcoin continues to go up. But you look at BlackRock, well, they're jumping in the same boat here because BlackRock is now launching a Bitcoin ETF that pays you monthly income. And the new BITA ETF will sell options on BlackRock's $49 billion in terms of the IBET fund. So, and then they're going to distribute that to premiums as yields. This is exactly the same model. Goldman Sachs is preparing to go into this on a rival Bitcoin ETF. So it's all about moving money, earning asset value, and getting more money to buy that asset if you believe in it. And I think that's where both BlackRock, Saylor, and of course, Tom Lee sits. Here is Andy talking about it right here, and he's saying, hey, maybe this run right now that we're in the middle of feels pretty good, and it's serious. I'd keep my finger off the red button for a little while. What do you guys think? Are you looking for a lower Bitcoin? Do you think 60K was the bottom? Just simply say 60K down below, or put below down below, and we'll see. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.